Hey, what's up, everyone? So, day was a mixed bag for sure. We were doing really well. It's a red day first and foremost. Let's start there. It's a red day, but there's a lot of positives to take from the day. Uh, the red day, I would say it's through no fault of my own, but if I'd actually been managing my risk properly and putting stocks in place, I probably could have saved myself quite a lot of the misery. What I mean by that is we were trading Phoenix Motors, and pre-market it was moving up. We did well trading at pre-market. We traded into the open. At the open, it made a move up, trading around 825, and then we got caught in an algorithmic flush. Essentially, what that is trader unloaded, sent a big sell order, followed by another one, totaling nearly 70,000 shares. Now, bearing in mind, there's less than 1 million shares in the float here, so this is a big portion of kind of 70,000 shares is 7% of the entire float. So there's a big order gone in there. It crossed two orders. The first one was about 30,000 shares, and it was about 38,000, and there was a couple of others tacked on. So it was about 70,000 shares in total, and the price just crashed. And we're talking 2 seconds, literally 2 seconds. And I'll show you the actual flushing and how quickly it actually went down. So we've been trading this up. We'd scaled in. We were now in at this at 15,000 shares, and it flushed within 2 seconds. It flushed almost a whole dollar. So 15,000 shares into a halt downwards for that matter. 15,000 shares, that's $15,000. And then when it resumed, it looked like it was going to resume another 25 cents down. So we were looking at the guts of $19,000 in the red zone. Now, if you've got a small account, let's say you've got a $10,000, $5,000, $10,000 account, bearing in mind that this was at that time $8 stock, and if you're getting, let's say, 4 to 1 margin, 5 to 1, 6 to 1, whatever, 4 to 1 margin, and let's say you've got $10,000 in your account, so you've got 40,000 worth of buying power that you can play with, that you can actually trade with. So at $8 a share, you could have been trading, 5, 6, 7,000 shares. And when that flushed down, the reality is that you get crushed. You absolutely get crushed. You get margin called, and you get liquidated by your broker. So you can blow up your account through no fault of your own, because somebody else in the market tried to unload huge size, and it just crashed the price on a very low float, very low price, low float stock. So just bear that in mind, that you need to be managing your risk at all times, and in line with that, the bigger the size that you're taking with the position, the more you need to be mindful of the potential it can go against you, because if it goes against you like it did me today, it could be a huge problem. Now, that being said, we did buy the bounce, add to our position, buy the bounce. We weren't quick enough to exit the position at the halt. So when it did resume, we added to our position to 2 lots of 5,000, so an additional 10,000 shares, and we rolled it up for a little bounce. So we got $5,000 back on the position at that stage before we then got stopped out. So we were at that stage over $12,000 in the hole on the day, and I was streaming live, feeling like I'd just been shot in the stomach, and really just wanted to take a break. So that's what I did. I walked away from the desk, took a break, regathered myself, and came back a little bit later, and traded the same thing. And after that big algorithmic flush, it started looking weak. So I went on the short side and we made some money back. We traded a couple of other stocks as well and made some money back there. So all in all, we finished the day a little over 2,600 trade profit, a little 2,600 in the red. So not such a bad day considering when unrealized losses at one stage in the halt were looking like over $20,000. So having trading with a larger account certainly helped me with that. And if I was trading with a $30,000, if this had happened to me at the beginning of the month, well, firstly, it was unlikely I would have been in for such a big size. But if this had happened to me at the beginning of the month when I only had $30,000 in there, I would have been a lot more stressed on the basis that that would have been 2/3 of my equity potentially gone at the resume. So that can happen. That can absolutely happen. You just need to be mindful of that. Before I show you how it happened in real time and how quickly it actually flushed down, hit that thumbs up button. It really helps me. Forget the algorithmic flush. It really helps with the YouTube algorithm. So hit that thumbs up button, subscribe to the channel for more educational trading content, and just remember, I do trade live most market days. Tomorrow I'm taking a break. I'm having a long weekend and I'll be back at it on Monday. So join me Monday. 90 minutes before the market opens, I'll be trading live pre-market and I'll be trading the first hour of the open. So come join me live. We're always discussing various strategies and various methodologies of how to trade. And you can continue learning live. Ask questions in the live chat. Happy to always help you and have you in my stream. So hit that thumbs up button and subscribe to the channel. Check this out and see what you think. So here's the trade, recorded of the trade. I'll talk you through it in real time, how it actually played out, and you can see that right now we're actually in this. We just got out of a position there. We got stopped out of a position, so we're not in at the moment. But you can see that there we've just entered a position. We got filled 10,000 shares. We got filled at 838. Very liquid stock at this stage. So right now you can see that the P&L here at 1,000, we're up 1,000, 800, 400, we're down 200. This is how quickly it's moving. So it went up to the half dollar, 850. We were looking for the break of 850. So we're just okay. I suppose we've got the devil horns now, the double top, if you will. That's a bearish sign. This is now pulling back. So I'm saying, okay, my stop when I got in there was 810. Mental stop, if it broke 810, we're getting out. So I was effectively giving it 25 cents on this for this move. So getting it at 810 didn't put a physical stop, it was a mental stop. It should have put a physical stop in place. And this is why you should put a physical stop. When the algorithmic flushes come, they really, really flush hard. Right now we're over here, we're 2,500 unrealized losses. Where it is kind of 820. It does tap that 815 level a number of times. It tapped it on the first pullback here. We got to 815. So we've got support at 815. We've got support. I'm looking at the other, the time sales, the level 2. We do have support at 815. So I'm not too worried, which is why I put mentally, while I was looking at stopping and exiting at 810. Should we do that? We're currently 2,500 in the hole here. Just need between 2,500 and 3,000 unrealized losses. As I say, not such a big. I'm not worried about risking that because we're looking at making that back, moving up through the half dollar, 850 and beyond. So our target is a lot higher. So we're looking at making at least 5,000 on this, based on the position. So we added another 5,000, averaging down there. So we're at 15,000 now. So where we were, bang. You see how quickly that happened. We got a false halt to start off with, and I'm like, okay, well, should I exit now? And I'm thinking, we're 13,000, 14,000 down. And then it's halted. I didn't have time to actually push the buttons to exit. Now it's halted. It's halted. It's looking at 14,000 as the loss because we're down at 740. But then it's gone up to 19,000 because of where it's looking to 18,000, where it's potentially looking to resume. So it's going to gap down. So it settled on 1715. So 17,750 on top of what we were already losing there. That's what it suggested there. What I'll do, I'll just skip forward to when it resumes, and we can see that we've got 5-minute resumption. There it resumed. So we added to our position rather than selling. We averaged our position down. We added 5, another 5. We could see it's moving up. We wanted to get back up. I was targeting the VWAP as a potential target, and I then set a trailing stop in place. So we've got 25,000 shares at this stage. So we're 15 from up here, 10 from down here. Our average cost here is now $7.98, nearly $7.99, and I'm thinking, okay, well, if we can just get this bounce off the bottom, the people buy the dip and move it up. This is a common tactic. So we're looking at buying the dip, moving up, and what I then put in place was a trailing stop, so that as we moved up, it would the stop loss would prevent us from another potential flush and even more losses. So right now I'm looking at putting a potential stop loss in place. You can see that I've got my fingers on my hotkeys. You can't actually see what I was doing, but my fingers on the hotkeys, and you can see that there's a potential stop goes in place here in a moment. So we're looking at now, instead of 17,500 down, we're only 7,000 down. So we're kind of trying to recover that. So it's 7,000 down. So that if we got out here, that would have been fine. We've got our trailing stop loss in place here for the move up. We should have got out there when it was 7,000 down. It would have been a lot easier to recover. And then decides to go against us, and we're finding it difficult to get past this 770 level, and we wanted to get up here towards the 780, 790, possibly get back up to $8 and get profitable. Yeah, great, fantastic. Realistic expectations though. So we wanted to try and target the VWAP, expect a bit of resistance at the VWAP, and then maybe go again a little bit later. So we just got stopped out there. So we're right now 13,000 down on the day, 12,800 down on the day. Now we did go back and trade this again a little bit later, but what we did is we traded it to the downside, and we made $5,000 back on trading it to the downside. We did trade Blue Hat as well, as I mentioned, and made $3,500 on Blue Hat, $2,500 on PETZ, and we got couple of 150 bucks out of WEBR as well. So we're only finishing the day 2,500 down. It's actually a little bit more than that when you factor in the transaction costs. But when you look at how quickly, it was literally 2 seconds. It was 2 seconds for this flush to happen. And this is a 1-minute chart, so you can see how quickly that went down, which is the lesson to take away from this is, if you've got a stop in mind, put your stop loss in place. Why I was using a mental stop loss and not a physical stop loss when I knew this was a short, very small float and a very volatile stock based on how it moved yesterday. So it was my own fault for not putting the stop loss in place. How quickly that flushed. Yes, I probably wouldn't have got stopped at 810. I might have got stopped at slippage at 8 or even 790. If I'd got all of my 15,000 shares out at 790 when we were up here, so it's a 40-cent loss instead of a whole dollar loss. And there is the problem. We could have bought back in for the bounce and ride it back up, but we're not going to dwell on that. We did make back most of the losses on the day, but today is a red day. So unfortunately, Today is a red day, and it's the last day of the trading day of the week for me. I'm taking a nice long weekend. I have a bit of a break, and I will take my bruised ego away with me, and we're back at it on Monday. So Monday is coming into the final trading week of June. We take away the 2,500 that we've got today, and we still have. So if we make $15,000 next week, that's the goal. So we've got 4 days to do that. So we need to average $4,000 a day. Why am I saying $15,000? So if we make $15,000 next week, that will give me the best trading month that I've ever had. So we're just under $15,000 with today's losses taken into account. We're just under $15,000 off our best ever month. So June has been really good to us so far. So let's do it all again on Monday. Come join me 90 minutes before the market opens, and I'll see you there. Have a good weekend in the meantime. Catch you soon.